Greetings. I believe that you're fantastic. We say that this year we must be financially literate. Now, in the previous video, we saw the tax treatment for persons with disabilities. Yeah. Now, in this video today, we are going to see the tax treatment or the taxation of what? Digital content creators. So this video is for content creators or people who are intending to be content creators, or those who are affiliated to content creators. So please ensure that you get to understand whatever I will explain here. Now, most of content creators usually think that the withholding tax, which is which in the context of Kenya is usually 5%. The 5% withholding tax that are usually withheld by the digital platform providers. For example, Meta, Meta, the owner, the business behind Facebook. Yeah, the business behind Facebook usually all 5% of the gross income. So they usually think that this is the final tax, which is not the case. So I'm going to explain to you the ideal case, what you are supposed to do. Yeah, and I believe at the end of this video you shall appreciate, or you will be able to know that most of content creators are usually exposed to the risk of tax evasion. And tax evasion, as you know, it is a criminal offense, punishable by law. So another thing, you might say that I didn't know. Yeah, so and I feel that is not in as much as I'm not a lawyer, but I feel that is not a sufficient defense mechanism available for you when you are caught in this situation. Yeah, so let's in this illustration, I'll assume that this is somebody who is earning 1,000 USD per month. So that one translated, converted into annual income will come to 12,000 USD. And also I'm assuming that the exchange rate of Kenya shillings, USD to Kenya shillings, I'll assume that it is 129,000 per USD, right? So if I do that conversion, I get and also I've assumed the transaction cost. Yeah, so I'm just saying that it's 129 net of the transaction cost. Yeah, right? So we are getting what? 1,548,000. But this is the gross income. This gross income won't come because I said that the platform providers, for example YouTube or Meta, will usually deduct 5% withholding, which I've said is not the final tax, and that is the essence of this particular video. But before even I move further, I want to tell you that the tax approach that a content creator can choose differ. So you can choose to do your content creation as a business entity, or choose to do it as an individual. So if you choose it as to go the individual way, there will be a different tax treatment from that person who has chosen to go the business enterprise way. And also for those people who have chosen to go the business enterprise way, they also have legal business forms or legal structures of business, which also have different tax treatments. Yeah, but for this case, I'll just use an example of somebody who has decided to go the individual way. So this person will be taxed through personal income tax, right? So that's what I'm explaining here. So we are here. I'm saying that this is the gross, but what you will receive, yeah, either as mostly they might do the conversion on their own, and you receive the amount in Kenya shillings. Yeah, so what you will receive is net of withholding tax. Yeah, now the withholding tax, as you will see here, is used as a tax credit, is an advance tax. It is not the final tax. So stay tuned and keep following keenly. Yeah, so this is what you will receive, assuming this is the gross. So you will receive 1,470,600. So this is gross. This is net of the withholding tax. So withholding tax 5%, so that's why I'm just multiply. Whatever remains is 0.95% of the gross. Yeah, you get 1,470,600. Then it is by law that if you are resident in Kenya, you are supposed to contribute to affordable housing levy. Yeah, be it you are employed or not employed, provided that you earn income during that fiscal year, right, or financial year. So you have, so housing levy is mandatory. I know most of you don't know this, or most of you have been ignoring this. So that deduction is a must, right? Then also SHIF is also a mandatory contribution. Be it you employed or not employed or self-employed, you are supposed to contribute SHIF. So we also have to calculate that. So SHIF is usually 2.75% of gross income, and AHL housing levy contribution is also 1.5% of gross income. So I've done that. So 1.5% of this gross here comes to what? 23,222. Then SHIF is 2.75% of the gross income, which is 1,548,000 comes to 42,570. This is per annum because this is annual income. Then the next step is you have to calculate taxable income. So taxable income, for you to calculate taxable income, you take this gross income, then you less the statutory, you less the contribution towards affordable housing levy, because I said in the previous video that affordable housing levy qualifies as a tax deductible. So you will subtract it. So it bringing an essence of tax shield. It's reducing the tax obligation. Yeah. So that's another importance of contributing housing levy or complying with that. So when we deduct that, we are coming to taxable income, which is 1,524,780. Right? Then the next thing, we have given you the tax rate here applicable in 2026. So the first, we have 5 bracket: first bracket, second bracket, third bracket, and fourth bracket, and ultimately fifth bracket. So first bracket is as 10%, second 25%, third 30%, fourth 32.5%, and fifth 35%. So this gross, taxable income fall under the third bracket. So of course we just calculate the first bracket will give us 28,800. Just take this one, you multiply by 10%. Then the second bracket, what do? You get the difference between the second bracket, the upper limit of the second bracket, and the first bracket. You get 100,000. Then you multiply by the tax rate for that bracket, which is 25%, you get 25,000. Then here, the third bracket, what you do, because this fall under third bracket, you just subtract the upper limit of the second bracket from this taxable income. We are getting what? Then we are getting 1,136,780. Then you multiply by the tax rate there. We are getting 341,034, right? Then from here, we sum this one. So this one will give us what we call gross tax. So gross tax for this person is 394,834. Then from here, I told you that the tax deducted, the tax withheld, you must keep that withholding certificate. Of course, the person who withheld the fund will provide you with with the withholding tax certificate. So that one will help you when you will be filing your tax returns. So you will attach that certificate or to show a proof. So you have to claim the tax withheld or withholding tax as a tax credit. So we have, from this gross tax payable, you have to less tax credit and reliefs available, right? So the first tax credit is the amount that which was withheld, so 77,400. Then again, if you are resident in Kenya, you are eligible for what we call personal tax relief. Personal tax relief at the rate of 24,000 per month. In a year, it translates to 288,000. So we have to subtract that one also. We less it. Then, because you contributed to SHIF is not a tax deductible, but it comes with what we call tax relief. So tax relief for insurance premium paid is usually 15% with a maximum limit of 5,000 per month and 60,000 per year. So if you calculate, this is the premium paid per annum. So 15% of this will come to 6,386, and because this is still still within the 60,000 limit, we deduct it. So when you deduct, then we arrive at what we call either tax payable, net tax payable, or net tax refundable. So in this case, if it is positive like here, then it is tax payable. So this person is having tax payable of 23,048. So if you did not know this, then by the time you receive this net income, and you assume that you don't have any tax obligation, then this one will accrue penalty, and it will reach a point whereby it will translate into a tax trigger, and the commissioner will do assessment on your behalf and issue you with a bill to pay. And I think at that point is when you will get surprised. You will be dearly surprised. So it's very important to understand this. And as I said, that tax evasion is a criminal offense. So at that time, then you will be at the mercy of a taxman. So if you understand this, then you stand a chance of reducing the litigation risk. So I think you've understood this. Thank you. See you in the next video.